Let's just talk about the overall environment that we see for IPOs globally. I mean, we've seen a little bit of a tick up since the fourth quarter of 2016, but we see record highs. We're still dealing with low volatility, and yet we're still seeing lower number of listings globally as well. How does Nasdaq fight that?
Well, we actually are seeing in the U.S. Higher listings than last year. We're actually up almost 100% year over year at this point in time. So we're pleased at where we are. We still see some of the markets around the world growing in terms of their IPO activity. And we're very encouraged. We think the pipeline is deep and long and strong, and we're all over the world talking about the value of a Nasdaq listing and the benefits that come with it to companies. But I think in general, we still think that the pipeline is going to continue to grow. We obviously are a little frustrated ourselves that more companies haven't come to the market and tapped these record highs.
I mean, you can't ignore the fact that the huge amount of money that we're seeing coming out from PE, of course. We're seeing these startups kind of opting for more private investment rounds right now, saying, hey, look, I don't want to face the pressures of being in a public light. What's the solution for that?
So we think there's a number of different solutions. One we embarked upon a few years ago, and we recognized the fact that companies were staying private longer and went from 8 years to 11 years on average. And so we actually put together the Nasdaq Private Market, which offers liquidity solutions for companies who choose to stay private longer. So we as Nasdaq believe that there is a life cycle of a company, and we want to be involved in every aspect of that life cycle. But we also took a leadership role this year in putting forth together a project we call Revitalize. And Revitalize is really focused on a couple of different areas. One is making sure that companies are not spending their time on kind of short-term performance of their stock and can focus on long-term growth. And what I mean by that is they don't get involved in the myriad of regulations and being able to minimize those in the U.S. Also, the way that stocks are traded, allowing companies to choose a different method in which their stock is traded, giving them better visibility into the trading of those securities. So there's a number of different areas, including tax policy, that we've put forth, and we think as an exchange, it's appropriate in our role to take the leadership in this area.
Yeah, you said you've been kind of doing your tour of Asia. You've been kind of in Southeast Asia, Indonesia. You're heading to China next. What kind of interest are you seeing coming from Asia so far in terms of listings?
So, Alana, I'd say over the past decade or so that I've been involved with listings here, it's been all about China. And we recognized just over the past couple of years that there are certainly pockets of entrepreneurial, innovative companies outside of China, and that's why we actually have done some hiring here in China to work with companies throughout the entire Southeast Asia region. So whether it's, as you mentioned, Indonesia or Vietnam or Singapore, India, and Japan.
Yeah, but we're still seeing Asia Pacific dominate when it comes to the global IPO market, at least for the first half of this year, especially coming from China, because we saw regulators kind of speed up the process for approvals, and then, you know, we've seen this robust IPO market where we've been limit up every single day for any kind of company that lists. So, you know, now that the queue is moving on again, what does that mean for Nasdaq? Is that a threat to you?
So we don't look at it as a threat, because my message always is we're not here to try to convince every company in every country to come and list on Nasdaq. Most companies actually belong in their local markets. So we are here for a small group of companies, very strong global brands, global aspirations, who are going to list outside of their local market. And for them, we're going to convince them to Nasdaq. Oh, it's way beyond tech. It's life sciences, it's fintech, it is education companies, which is a big sector in China right now. It's e-commerce. We see a couple of e-commerce companies and fintech companies that are actually on the road towards IPO in the U.S. Currently.
You know, just given the fact that Hong Kong obviously very significant when it comes to China as well, and we've seen the Hong Kong exchanges, mainland China, they're forging these closer ties. Do you think, Bob, that this is actually a threat for Chinese startups in particular that will choose to list in Hong Kong versus New York?
Well, no, we really think that the strong companies who have global aspirations will choose to list in the U.S., and we certainly expect the preponderance of them to continue to list on Nasdaq. What's interesting when you begin talking about Hong Kong Stock Exchange and a number of the exchanges throughout the region is Nasdaq is much more than just a listing venue. We actually are a technology provider to a lot of exchanges. So Singapore Stock Exchange, Hong Kong Derivatives Exchange, Japan Next, ASX, products. We're actually the technology partner for those exchanges. So at our core, Nasdaq is truly a fintech company that actually owns and operates exchanges globally.
Yeah, 2 years ago, I mean, we saw this kind of wave of U.S. traded Chinese firms delisting in the U.S. and then relisting back in China. I mean, has that changed much now? I mean, do you see more of these companies chasing the higher valuations here?
Everyone chases higher valuations. Whether you're a financial sponsor, you're going to look for, or a company, you're going to look for the venue that gives you the highest valuations. I think there was a trend there for a while. I think that the regulators in China shut down some of the reverse merger activity that allowed those companies to quickly list. And so we firmly believe that in the same way that companies get taken private in the U.S., companies will get taken private here in China and in this region, and we'll look for the best place to exit in the future, and we believe that a significant number of them will list on Nasdaq.
And Bob, before I let you go, I mean, there's been so much talk about Bitcoin and reaching 5,000 for the first time yesterday. What's Nasdaq's view when it comes to these ICCs, or ICOs, I should say? I mean, I know you guys have the blockchain technology that you use quite a bit, but would this be something that you'd be interested in?
Well, we're always interested in it, and you're right. We began looking at Bitcoin about 4 or 5 years ago, and then recognized that it was the underlying blockchain technology that was most interesting to us and would be most interesting to our, whether they're exchange partners or other partners that we work with on the technology side, as we have an enormous market technology business globally. And so we are focused on the blockchain piece. We will continue to evaluate whether Bitcoin or other cryptocurrencies should be listed and traded on exchanges.
Does the volatility of it all concern Nasdaq at all? I mean, we've heard the likes of Jamie Dimon saying it's fraud. Other people say, look, this is just kind of the future now. I mean, where does Nasdaq stand in that discussion?
I think there's two areas. One is about liquidity and making sure that there is enough liquidity for underlying trading to happen on exchanges, and then two is, what are the rules of the road? What's the regulation around it? How can everyone feel comfortable that they are trading that cryptocurrency in the same way as they're trading an equity on Nasdaq? And we want to make sure that everyone is taken care of, that the investor is protected.